Well, this is Herb Lawrence with the Arkansas State University Small Business Technology Development Center. And today we are talking to our business consultant, Robert Bahn. We have a workshop coming up at the end of this month on business financing options. And since Robert spent a lot of his career as a banker, I thought it would be beneficial if Robert would just share a couple of things that in his experience will cause a person to not get the funding that they requested. So Robert, as a banker, 3 things that will kill you when you walk in the bank.
Well, there's 3 things that will kill you when you walk into the bank. It's kind of like baseball, 3 strikes and you're out. The first thing the banker is going to want to know is how much money do you have to put into this deal. If you have nothing to put into the deal, the chance of you're getting a loan is going to be 0. 0 in, 0 chance. The next thing the banker is going to ask you is, well, what is your credit score? And if you tell him that your credit score is in the 500s or low 600s, that's strike 2. And then the third thing is, the banker's going to want to know, have you ever owned a small business before, or have you ever worked in the kind of business you're wanting to start? I had a client one time, I asked him that. I said, have you ever worked in a bar before? He said, no. I said, have you ever owned a small business before? He said, no, but I've been to a lot of bars. Well, guess what? His chances of getting a loan with no experience, no money down, no collateral put into it, and a low credit score, those are the first 3 things the banker's going to want to know from you when he starts talking to you about a loan. And if you get 3 strikes, the conversation won't last very long.
Excellent. Well, Robert, you brought up one topic very quickly, collateral. If I don't have a lot of collateral, but I've got a good business idea, and I have a little bit of money to put into the deal and an equity injection, what other options might be out there that, as a banker, you might suggest I pursue?
Well, the bank could loan you the money and try to get an SBA guarantee. The SBA does not loan the money. The bank is the one who is the lending institution, but what they may do, because there may be some substantial risk involved, they may send your loan to the SBA for them to review and to see if the SBA will guarantee the loan. In some cases, you only have to put in 15 to 20% down and not 25 or 30 or 40% for a new venture. The SBA is very, very much wanting to help people get into business and create jobs, and most banks are looking to make loans to people who have experience, collateral, and good credit rating. And the SBA is a good way to be able to go, to be able to help get your idea or your new venture started.
Great. And if you are looking at for funding to either start a business or to expand your existing business, the ASU Small Business Technology Development Center has a workshop that you need to look at Wednesday, October the 26th from 1 to 4 p.m. Business financing options, alternative ways that you can find funding to get that business started up. For more information, see the rest of our blog article or give us a call at area code 870-972-3517. Thank you.
Thank you, Herb.
Great.